Today on the show, I have the pleasure of speaking with Ava Benesocky and August Biniaz. They have joined forces in 2019 to form CPI Capital Group, a Canadian-based real estate investment firm. And they're both extremely passionate about helping the average Canadian investor successfully invest directly into US multifamily syndications with trusted syndicators across high-growth markets in the US, so Canadian investors can also reap the benefits of cash flow and appreciation. G'day, gang. Welcome to the show. How are you doing today?
Good day. We're doing great. Great. Thanks for having us.
Thank you for having us.
My pleasure. And for those people who don't know, you don't have a strong Canadian accent, like a rough or don't you know, hey? Where are you guys dialing in from today?
Vancouver, Canada.
Nice. How's the weather up there right now? It's a beautiful time of year, I could imagine.
Yeah, it is so beautiful. It's so beautiful. The sun's actually shining bright today, so we're feeling happy on our end.
Awesome. Well, look, diving into the show, I asked the first question for all my guests, and because there's two of you, we'll go, ladies first, one at a time. Rewind the clock and tell me how you made your first ever dollar as a kid.
My first ever dollar as a kid was doing gardening. Nice. Gardening for my parents. They gave me money to do some gardening for them. That's my first kind of...
Yeah, and for me, it was working at a pizza shop. I think I was 12 years old. And I remember I had to seed the olives. Olives would come in with a seed, and I had to use this hand machine to press the seed out of them. So that's a funny memory.
Nice, awesome stuff. And tell me about growing up in Canada. Is it different? Have you lived anywhere else so you can compare it to? What was the sort of Canadian childhood like?
Yeah, so I'm third generation Canadian, and I grew up in a small city, so a very, very tight knit community that I grew up in. We were all about sports and school and just having that really tight knit community. I moved out to the big city, Vancouver. I about 3 years ago now, which was definitely a huge step for me. I didn't know anybody out here. And then I started my journey in Vancouver, which was obviously meant to be because I co-founded CPI Capital with August just a couple of years ago now.
Awesome. Yeah, and for myself, go ahead.
No, for yourself?
Yeah, for myself, I grew up here in Vancouver as well. That's about it.
So walk us through the backstory of both of you. You clearly didn't just stumble into real estate, and we'll get into CPI in a minute. But where have you both come from? What did you have careers prior to forming CPI Capital?
Yeah, so I was a real estate agent for a decade. And I dealt with a lot of savvy real estate investors. I'm from Alberta, and then I, of course, transitioned to Vancouver here. My main objective was to find the best deals for my investors and for them to invest their money into real estate, because everybody wants to put their money into real estate. So I was super passionate about the real estate since as far as I could remember.
Awesome. August?
Yeah, for myself, I started my journey in real estate 16 years ago as a licensed agent. I wasn't really good at being a real estate agent, but I was good at finding deals. So I started doing small fix and flips. I eventually started my own general contracting company, still doing fix and flips. Then eventually we started building luxury single family homes. And I always wanted to scale my business. So I eventually syndicated, I didn't even know what syndicated was at that time, but syndicated multifamily ground up development projects where I would oversee the project, bring on the investors, find the deal, bring on the GC, bring on the design marketing team, and get a portion of the profits of the project. So I fell in love with that business model. I guess it kind of segues into the pain points that existed in that business and how CPI all came about.
Yeah.
Well, it's interesting you bring that up. So you actively, and it sounds like you're still doing it, fixing and flipping, and that then just was morphing into larger and larger projects.
Exactly. It's definitely a transition. I'm no longer involved in real estate on the development side. There are projects that I'm still part of, which are still some in rezoning, some in development currently. But when I started out in real estate, the plan and the goal was to scale into large development projects But the more and more I was involved in the development space, I realized that it's not as glamorous as it is made to seem, especially here in Canada, because the real estate is very cyclical. You could start a project out initially having certain performance in place, and then realizing a few years down the road that all the numbers have changed because the Canadian real estate market, particularly in Vancouver and Toronto, are so foreign investment. They're so related to foreign investment that something could happen in China and would affect the market here. Also, it's not a very business friendly environment. Vancouver and Toronto, their mortgage laws are very rigid. There's also different levels of government. The system is in place to make it more difficult for developers trying to scale. You got public hearings when the whole project is at the hands of neighbors in the area, and they could vote certain thing in or not, or out. And when the margins are just so thin, if something small could happen or a delay could happen, it would eat away at a project. And it was also the time horizon. It was a very long time horizon to get a development project done, not like the US. And it's unbelievable that as far as the construction costs, Canada compared to the US, how much more costly it is to build and development projects here in Canada compared to the US. So and also not on the investor side. So if you're bringing on investors to do development projects, there is no element of cash flow. So nobody's getting paid any returns until the project is built and every single unit is sold. If that matches certain investors' investment thesis, then it makes sense. But most people, especially with social media and this day and age, they want that cash flow. They want that passive income. And ground up development projects, unfortunately, don't provide that.
It's interesting you bring that up. I'm a structural engineer, and I've developed a lot of projects here in LA and in New York for developers. And I worked for a developer for many, many years before starting my own company. So I'd be interested, what is the approval process time in Vancouver today? Like roughly, is it 2 years from entitlements to permits, or is it longer than that?
Yeah, around that 2 years mark with certain delays. Again, there are public hearings involved. There's also, construction is not only the issues as far as, rezoning and the zoning issues with the city, but you also got environmental issues. You could start digging and find things that would delay the project, even in the structure itself. Any structure built before 1991 has a high chances of having asbestos or other hazardous materials in it. And then also through the course of construction, there's material changes, as we saw with the price of lumber and price of drywall a while ago here in Canada, issues with contractors. So development definitely is not as glamorous as is made to seem, but there is a lot of money to be made. But that money is mainly for big groups and big corporations that continue scale and that bought land a long time ago. It's a very difficult for a newer, smaller company trying to scale in the space.
No, I completely agree with those sentiments in terms of the risk involved and hence why the certain type of capital that you attract for development deals is completely different from that stabilized value add sort of process that we all sort of talk about on this program. But it is interesting to hear because 2 years, I developed in Long Beach, LA County and New York, and even in Austin today where I'm actively investing, it's about 2 years to get stuff through through permits from go to woe. That's even with by right. So the approval process in the United States isn't as free-flowing as people think it is. It is still cumbersome, but I think, and correct me if I'm wrong, I've always looked at Canada as being a hybrid between Australia and the United States, and it sounds like you guys have multifamily in Canada, but in Australia, we don't have as multifamily like you do here in the US, and maybe not as much as even you do in Canada. And that's because of our lack of financing vehicles that you mentioned it just before. The selling of the condos off the plan before construction loans get involved, and the I don't want to say sophistication, but the lack of sophistication, the lack of lenders in Australia make it all build to sell model, not a build to rent model. And I correct me if I'm wrong, but I feel like Canada's that hybrid between the US and Australia and has probably those similar issues with the financing and condos. Coupled with the cost of construction, condos are really the only way forward. Would that be a correct statement?
Exactly, and it all goes back to cap rates. Cap rates being so compressed here in Canada, especially Vancouver and Toronto, at around 2%. It doesn't really make sense to own, multifamily. And when I see brokers advertising larger multifamily deals, that are similar to the deals we look at in the U.S., and I ask them the question, why would somebody buy this at a 2% cap rate or below that? And they're like, they do it for capital preservation. Mm-hmm. This is a appreciation game. They just need to park their money on this project. This is not in any way. In most cases, they can't even pay their mortgage payment from the rent they collect. Yeah. So, and then also another main difference that I see between Canada and the U.S. is that a lot of multifamily projects in the U.S. are garden style built, with a pool and the amenity center in the middle. Here in Canada, we build upwards. That kind of the resort style development projects are not really here in existence. I believe is also because of the cold. It just doesn't make sense. So those are the major differences. It was even a point where in Vancouver a few years ago, and even in Toronto, that it's very common to do something called condo conversion, taking apartments and turning them into condos and then selling them. So yeah, I mean, with the tremendous rise of real estate values for developers and active real estate investors, it makes a lot of sense to sell condos rather than, going into the business of, and it's also the rent to value ratios. I mean, our rent to value ratios are so low that there's just no margins. There's just no profit. You're in negative cash flow. That it economically makes no sense. It makes a lot more sense to turn the apartments into condos and sell them. And that's why we have one of the worst housing crisis here in Vancouver and Toronto, exactly because of that.
Yeah, no, you're saying everything that is exactly what's happening in Australia. Cost, the rent to value, the cost of construction, the lack of sophistication in terms of, and again, sophistication is not the right word, but the lack of financing options. We don't have a Freddie or Fannie that can just give you 2-3%, interest only for 10 years on a project that they can value the NOI at the end of the development. They have to say, no, I can't see that NOI, and you need to sell off the plan. But it boils back into your rent to value ratio, which you just mentioned, which I completely agree with, and also the cost of construction. Australia and Canada are so similar because we're still part of the Commonwealth. It's just a different structure, and we don't have garden style apartments in Australia, and we're in a warmer climate. So again, it goes back to when you're comparing the colder climate of Canada versus Australia versus America. I think it boils down to that a financing arm as well, coupled with the cost of construction, just only means penciling for condos is the only way. I know there's a big push in Australia to try and do the build to rent, but it's just trying to find those financing vehicles that do that. And for everyone who's listening, did you just hear 2% cap rates in Vancouver? Part of the reason we'll talk about this, the run up and the run down in cap rates here in the United States, is because, in my opinion, the US is the most has the highest yield on commercial real estate in any Western country in the world. And when you're coming from Sydney 2%, Vancouver 2%, Hong Kong 2%, a 4% cap rate looks pretty freaking attractive. I bang on that a lot on this show, but that is part of the reason we're seeing so much liquidity in the market is the fact, and this is my 2 cents standing in my soapbox, the privacy laws here in the United States are really quite strong for international money. And secondly, is that cap rate comparison when you're comparing to other major first world countries around the world, London, Paris, Hong Kong, Australia, Vancouver, that it's still so much more. It's so much more attractive. So anyway, enough of that, but I really wanted to touch on that because you guys have such a similar perspective to I do, being boots on the ground in Canada, seeing that disconnect between what you can find available here in the United States versus what you can find on the ground there. So let's pivot into CPI and how that forms. So tell us the story about how you two got together, because I'm sure there's a pretty good story behind that.
Definitely, yeah. And as being real estate professionals and being in this space, what started CPI was the pain points we realized that investors had, and many of the subjects we spoke about. medium home price at $1.3 million, it's not really a business model that you could, it's not like Florida or Texas where you can buy a home for $300K and rent it out for $2,500 a month. Again, it goes back to those rent to value ratios, but Ava can speak up on how everything started.
Definitely. And there's this fine line that existed for real estate investors, to be an active or a passive investor. With the home prices being such at a high level of entry, you can really only scale your portfolio so large. So, we realized these massive pain points that existed, and we were introduced to this syndication concept, and we actually fell in love. Like from day one. And I'll never forget. I'm like, listen, we gotta dive deep into this and figure out how we can bring these alternative investments to our fellow Canadians, because there is so much opportunity that exists right across the border. And that's where we started our journey. And
exactly. The pain points, we realized were the rigid mortgage laws here in Canada, the thin line that exists between being an active and a passive investor, the high point of entry in getting into properties that existed. Medium condo price in Vancouver is $700,000.
Wow.
And also you'd be negative cash flow for a long time. So, and Canadian investors consistently get lots of information online, obviously content coming at them, invest in real estate. But when they have it, and sometimes might have a difficult time getting approved for their own primary resident, let alone to now try to become real estate investors and continuously buy. And that was an issue that Ava noticed in her profession as a real estate agent, focusing on investors, and also in my business as a developer who was sponsoring deals, but didn't want to have my investors and my own equity locked up for 5 years at times. Yeah. And when we realized, such investments that existed on the U.S. side, not only on the private equity concept, but also on the investment itself, on the asset itself, where it was, you're able to, I was watching, first time I heard about the deals being done in the U.S., they're doing a 70-30 LTV, in some cases 80-20 LTV. Yeah. From the rents they collected, they were able to pay their mortgage payment, taxes and fees, third-party property manager, and still pay their investors 8 to 12% per annum. And that was so shocking to me that I'm like, hey, this can't be, because I'm so used to, Canadian and Vancouver.
Literally in pure utter shock. And when I heard cash flow and appreciation, I'm like, this
cash
is
flow,
gold.
Appreciation, and forced appreciation.
So,
you got cash flow from day one, you got the, natural appreciation of the market, and then you go in there and force appreciate it. It was a no-brainer for us. And then now on the private equity side of it, to be able, being Ava and I both being the facilitators and being the middleman, me as a contractor, I get paid to build a home for a client or be involved in a multifamily project. I get paid no matter what happens with the market. Same thing as a real estate agent. They get their commission no matter what happens. But in the private equity space, the general partner is compensated relative to the performance of their asset and their performance. So we fell in love not only with the asset, but also with the business model, within this space where, the feet of the GP is held to the fire to make sure that they perform. And so it was just beautiful on both sides, looking at it from the view of an investor or from an active real estate investor.
And we realize, there's billions of dollars of Canadian capital being deployed into the US every year. So we started looking around Canada and seeing if there's other companies out there that are partnering with retail investors to focus on deploying retail capital to the US. And we looked around, Reed, and there's not a lot going on this side of the border, but we knew it was possible. So we partnered up with the best lawyers and accountants, and we built up our corporate structure to obviously, tax efficient corporate structure for our fellow Canadians. And that's where it all began. Yes. But we put our feet to the fire, what's the word? And we
put our foot on the gas pedal.
Foot on the gas. And we had to both leave our careers and fully focus on building this company from the ground up.
Yep.
Because we didn't have what's the word I'm looking for? We didn't have
Credibility.
we didn't have anything to look up to, so we had to build it from the ground up, put our own systems in place.
We didn't have a blueprint.
We didn't
in
have
the
a
US,
blueprint.
there's so many other groups and companies doing these business models, and when we came to copy that, we're like, oh, hold on a second, there's no 506C, there's no 506
terminology is completely.
hold on a second. Hey, let's start an LLC. There is no LLC
no
in Canada.
LLC.
We got a corporation, the C corp that you guys call in the US, and we have a limited partnership, but there's no hybrid as they have it in the US. So
we started putting in our 12, 16-hour days, and we still are putting in our 12, 16-hour days, and we're really seeing traction. And then, just getting Canadians familiarized.
Awesome. I've talked a little bit about on this show the steps, and I've spoken on other shows about the steps that international investors need to take in order to, for me as an operator, for me to accept their money, there's just a bunch of stuff they need to do. I'm sure it's very similar, and I don't need to repeat it, but I would like you guys to repeat what it is that Canadians have to do in order to be set up correctly here in the US, because I think that is very key to understanding the process before you can go start investing in a deal in, say, Texas or Tampa or Orlando or Jackson, Mississippi.
Yeah, no, exactly. And it again goes back to the information coming at Canadian and international investors about creating an LLC and investing through an LLC. A lot of operators in the US that's the requirement they have for their international investors. Sure, you can invest with us. You're from Canada or you're from Hong Kong or Great Britain. You want to invest with us? Sure, create a US LLC and you can invest through that LLC. Mm-hmm. But there's also issues there because, in particular with Canada, the CRA, Canadian Revenue Agency, sees an LLC as a corporation. Any kind of returns that come back from an LLC back to Canada will be double taxed. They are seen as dividends from a corporation. Now, it does make sense for an investor who's looking to keep their capital in the U.S., possibly planning to move to the U.S. in the future, or has other plans or businesses in the U.S. Then it makes sense. Sure, they can invest through an LLC. But if the plan is to have that cash flow and repatriate their funds, the LLC won't work. Now, what makes it even more complicated in our case, we needed to have control, and we need to have control over our investors. And so it couldn't be that investors would come to us and we just forward them to our fund in the US. There had to be a fund here in Canada. So that's why we created a tax efficient fund structure where all our Canadian investors invest into a Canadian fund managed by us. And that Canadian fund invests into a US fund, which is managed by the general partnership, which is us and our US partners.
And talk to me about what is the alternative, because you bring up a good point of the LLC versus, so what entity structure do you have to set up in the US in order to not avoid that double taxation for Canadian investors?
It gets a bit more complicated, but it's a web of corporations, limited partnerships, and other entities. We have an org chart that's like a web, and the cost does make sense that goes into building this when it's a fund, when we have tens of investors and what have you, because the cost for creating the fund gets divided between the investors and it's a nominal amount. But if a single investor is looking to use this process, it doesn't really economically make sense. Mm. And you also got on the US side, the asset, the operator eventually provides a K1 to the investors. But in our case, CRA doesn't accept a K1. We need to convert that K1 on the fund level to a T5013 and then convert that T5013 into sub T5013s for individual investors, who then they can take that T5013 to their Canadian accountant and say, hey, I've paid my US taxes on the income I've made over here, so I don't want to be double taxed, and here's the proof that I've paid for it.
And then a foreign tax credit is in place.
And what we realize is, there are large institutions, for example, a Canadian pension fund partner with Greystar on the US side to buy multifamily. So there's like Ava said, there are billions of dollars annually going into the US from Canada, in particular into the multifamily space. And there are other companies who also facilitate, but the educational component was non-existent. So when Ava and I started CPI, we also started Canadian Passive Investing Academy. alongside CPI, whereas our YouTube show, our newsletter we send out, and also one-on-one non-monetized coaching calls that we have with investors and partners about to make to shed light on many of these items that exist when it comes to taxation. So our process, when we talk to investors, we talk about taxation from day one. We try to put if they don't have a cross-border accountant, we put a cross-border accountant in place for them and refer them to a cross-border taxation group. So it's not a situation where now the tax comes up and they're rushing to trying to file their taxes. So it's a very hands-on, and also because we're newer in the space, we want to be in the space for a long time, and it's important to have happy investors so they can continue to invest with us and spread the word.
100%. I completely agree with all that stuff. And it's great that you've gone through the agonizing process to learn what the big boys are doing in terms of the Canadian pension funds partnering with the superpowers of Greystar. It clearly can be done, right? You're trying to get that access of information to the average investor in Canada and replicate it just on a smaller level. So well done for doing that. How do you deal with the exchange rate? Because there's obviously exchange rate risk that comes involved with that. And a lot of my dealings with international investors has been that they're concerned about it, particularly coming from Australia, where the Australian dollar might not be as strong as the Canadian dollar versus the US. That adds a risk. That could also eat away at your cash flow. So how are you mitigating against that, if at all?
Yeah, so our Canadian investors, they actually open up a US bank account. They invest in USD and all returns come back in USD.
Yeah, and the advice I give to our Canadian investors is see this as a US investment. Yeah. So the moment that if you already have US funds and you're investing with your US funds or you're converting it, the moment that conversion takes place, don't look at this investment as a convertible kind of what it is in the original funds it was in. It's a US investment and the returns are in US, and your final repayment is in US. So it's a US investment all the way through.
But you're talking about how you're trying to get that cross collateral back to the cash flow back to the United States, to Canada. So that has to play an issue at some point, right?
Yeah. So the original investment is in US dollars.
Yep.
The cash flow that comes back in US dollars into their Canadian USD account.
Got it.
But it's more of a mental thing rather than an economic thing. I'm making this investment in US dollars. This is my US investment. I'm not going to go onto a website and check the difference every day and see how it affects just look at it as a US investment, and potentially long term where you can reinvest the gains you've made into other US investments, but it's a US investment.
Got it. No, that makes sense. And the same analogies that I was telling to my other Australian and European investors, it is a US investment. You bring it here for a period of time, and then you may take your lumps back at some point in 5, 6, 7 years time. And at that point, you may have to deal with some exchange risk, which we all have to do.
But it could be both ways. The risk could be also on the positive side, True. Right? So it depends. And if it's a situation where your original currency has depreciated, at that time you can reinvest with other operators or with the same operator you're with, so you're not stuck into that. But it's a mindset thing rather than an economic.
Complete. And there's a little bit of differences between someone who's in Australia and Europe versus Canada, where pre-COVID, you come across the border and happily spend dollars, on a US vacation, right? It's very easy to come across the border, where a lot of Australians and international, that have to get on a flight. It's a little bit different. So I know when I talk to a handful of my Aussie investors, they are. They're aware of that. It's sort of more like the slush fund when they come to holiday in the United States. So that's awesome. What has been the biggest challenge that you guys have faced in educating the average Canadian investor about the benefits of investing here in the United States?
You know what? This is a funny one. One of the biggest challenges that we've had is that the returns are too high. So our advisors, and people actually think it's too good to be true. So
could be it could work in your negative when you're talking
absolutely.
about 18, 20, 22% annual returns, and the Canadian investors are
happy with their 5-6% annualized returns. So we were told from our advisors, maybe kind of bring those returns down a little bit, because then people won't think it's too good.
We're like, hold on, this is our pro forma. We've already been conservative on every single number that we've used here. Like, that's fine, just bring it lower. Yeah.
It's funny.
As soon as you
Totally. When I talk to investors, and there's a lot of scam things that happen too in this world, in this space. But you always point out who are the partners that we've partnered with, who are the lawyers, what accounting firm. We've partnered with the top lawyers and accounting firms in this space. So
the great thing about real estate and real estate private equity is your investment is backed up by actual tangible asset, right? Sure. Obviously, there are a lot of investments, like Ava mentioned, like cryptocurrencies and and other types of venture capital companies and startups, that there are a lot of risk. But in real estate, in my opinion, personal opinion, I think real estate has much less risk, especially real estate private equity or this exempt market that we're in has much less risk than the stock market. People, the stock market is seen as the market, and it seems like, hey, it's not a risky investment, where in my opinion the stock market is more risky, especially if you're not an expert, than real estate. Real estate, it's just there, it's cash flowing from day one. You got the richest country in the world, with people making the median income being the highest in the world. So
can you tell we're in love with it?
Well, one thing I wanted to ask is, do you get the tax benefits in Canada like you do in Australia and in the States? Do you get tax benefits of owning a physical asset in the US?
Yeah, so
high level. I'm not asking for details.
Yeah, not really. So obviously on the US side, you got depreciation and many other tax benefits that exist. Also, you got a 1031 exchange. So some tax benefits can be sent down to the investors, but not all. And again, it goes back to what's the plan of the investor. Is the investor planning to eventually move to the US, or are they planning to keep their investment in the US? But if the plan is to repatriate their investment, then a lot of tax benefits that exist on US side don't follow through to the investor.
Got it. Very, very interesting. Well, look, I want to thank you both for coming on the show today as we start to wrap up here. What does the future hold for you guys now that CPI is so young, but it's looking to expand? What do you guys got in store for the next 5 to 10 years, both personally but also professionally?
Yeah, absolutely. We have our target to have $1 billion assets under management. With the co-syndication business model that we have, we already have $92 million of assets under management. So the $1 billion mark doesn't look that far away. But initially, it goes back to the CPI's inception. The plan was to be the operator. Yes. But when realizing that other companies who were the operator and who had 40, 50, 100 employees, those paychecks paid to the employees are coming out of the investors' gains. The money that just doesn't get created in thin air, but in some cases it does. The $4 trillion that the U.S. government just printed gets created in thin air. But I'm just being facetious. But now going back, for these investment groups, they have a lot of employees, and so for us, starting out, we realized that this co-syndication model makes a lot of sense. And brings the cost significantly down than to be the operator. But the eventual plan is also be the operator. Now, to be the operator, we have to have the infrastructure in the region we want to be in. We have to have our asset manager. We have to have the connections with the brokers. We have to have the property managers in place and employees in place. So the eventual plan is to come up with a region that we feel comfortable enough to have that infrastructure in. We're on the west coast of Canada. A lot of west coast investors do invest in Arizona and also Nevada. So the plan is to create some form of infrastructure, possibly in Arizona. But what we're realizing is majority of our investors are from East Coast, or they're from Toronto, Ontario.
They are.
So it's like we're still figuring things out. But currently, we want to have that deal flow. We want to find the best operators with the best track record to have happy investors, and then eventually diversify and grow from there to do our own in-house deals.
Yes.
Awesome. Awesome stuff. Well, guys, I wish you all the best. At the end of every show, we like to dive into the top 5 investing tips. You ready to get into it?
Yes, please.
Absolutely.
All right. So Ava, for you can go first. What is a daily habit you practice to keep on track towards your goals?
Is this business or personal? Sorry.
Oh, either or. You know, what you could be personal, it could be business.
A daily habit that I have is take care of yourself first. So I go to the gym in the morning.
Nice.
My daily.
Go ahead. No, you go.
Yeah, my daily is called triage the day. Trying to put out fires, but it's just knowing what the day is supposed to, all the plans and all the schedules, but also what are those most important goals that you could get done in the day that goes back to your goal, if it's a monthly goal or is a company goal. What can I do today to solve this problem or to get to my goal sooner, aside from so it's a daily triaging of tasks.
Awesome. No, I love both those answers. I'm also a gym person, maybe not necessarily in the morning, but more meditation and be calm before I got to get into the fire, because sometimes if you don't take that time for yourself, you feel like you're being sabotaged for the day. So awesome stuff. Question number 2 is who is the most influential person in your career to date? Ava, you first.
August.
Oh.
That's the truth.
Really?
Yes, August.
Oh, nice.
Is the most influential person. Yeah, I'd have to say.
Awesome.
Yeah.
And August?
Who's the most influential person in my business today?
Or just in general, you know, it could be someone else that you had as growing up.
The most influential in my current business today has got to be Dan Hanford. He was when I said the word syndication, he was the first YouTube show that I watched. I'm like, what is this guy named Dan Hanford doing?
True.
So I've always got to give him the accolades he deserves. But personally and in life, as my mom is the most influential person for me in business. Her frugality and her viewpoint and her sharpness and her love of real estate. So those are my 2 influential peoples.
Love it. Question number 3 is, what is the most influential tool in your business? And when I say tool, it could be a physical tool like a journal or a phone, or it could be a piece of software that you just can't run your business without. What is it?
That's going to be my CRM, HubSpot.
Got it. Love it.
Love it.
Yours, August?
It's got to be my university, YouTube.
You guys have a university as well?
No, like actual university.
Oh, right. Awesome.
No, it's incredible. It's people don't realize how lucky they are these days about the amount of information and content that exists on YouTube. It's truly, unbelievable. Is it come up with the subject that you want to educate yourself in, and you can get so many different perspectives and content available on YouTube. Hammering it in to a point that even if you wanted to forget, you couldn't forget it.
Yeah, true.
I love it. No, and you're exactly correct. The access to information, particularly in the US, around real estate investing, since I've been here for the last 10 years, it's blown up, and it was so much bigger when I came from Australia, and probably even the same as you guys coming from Canada. So completely agree with that 100%. Second last question is, in one sentence, what has been the biggest failure in your career or lesson? And what did you learn from that failure or lesson, in the growth of this company?
Yes, for sure. My biggest failure was probably trying to do it all by myself without having a blueprint. Going back, I would have tried to really find that blueprint to save myself a lot of headache and a lot of lost sleep.
For me, it goes back to Dan Sullivan's book, Who Not How, and it's hiring or retaining their wrong person for the job, and then trying to turn them into what I was hoping for them to achieve, trying to morph them into something that they really weren't, where in fact I could have just gone and found the right person for the job.
Right. Yep. Outsourcing for sure. Love it. And last question is, where can people reach you to continue the conversation? They want to be in your sphere. Where do they go?
Awesome. You can find me I'm very active on LinkedIn, Ava Benesocky, and I'll be there.
Yeah. So you can reach us. CPIcapital.ca is our website. CPI Capital on LinkedIn, and we're easy to find. Yes. Just a phone call away, just a message away. And myself, August Biniaz, on LinkedIn as well.
Awesome stuff, guys. Well, look, I want to thank you so much for jumping on the show today. Some of the key takeaway points that I took away, we're writing down a bunch of notes here. I think it's very similar sentiments that I've had, bringing Australian investors to the United States. It's through the education, understanding what else is out there. It's interesting to hear that you've got to water down those returns to make it seem not, it's too good to be true for your Canadian investors, but also then going through the rigmarole of the taxation, the double taxation, the all the red tape that you need to be really well versed on because you're trying to raise capital from Canadian investors to place in the United States. And if you guys aren't well versed on it, which you guys are now, you wouldn't be seen as an authority in the space, but you've gone out and you spent the hours, you spent the time getting the right people and right advice to go off and be successful. So I think that is a real kudos to you guys. But in general, I think just it's your hustle, and I can clearly feel it through the camera about what you're trying to achieve here with CPI. So really, really well done. Did I leave anything out?
No, that's great, Reed. Thank you so much.
Awesome, guys. Look, I want to thank you again for taking some time out of your day. Enjoy the rest of your week, and we'll catch up very, very soon.
Thank you so much.
Well, there you have another cracking episode jam-packed with some incredible advice from Ava and August. And remember, they are both active on LinkedIn, so please jump over to LinkedIn and hit them up. Also, go to cpicapital.ca, which obviously stands for Canada, to check them out. And if you want to reach out to them, please do so on their website. I want to thank you all again for taking some time out of your day to tune in to continue to grow your financial IQ. If you want to reach out to me at reedgoosens.com, or you can find me on Instagram or all the social medias. And we're going to do this all again next week. So remember, be bold, be brave, and go give life a crack.